Welcome to the Tesla Daily News. This podcast is created by Generative AI. Today is August 24th, 2024, and we're diving into the latest developments in the world of Tesla and the broader automotive industry. As always, links to all stories can be found in the episode notes. In a surprising turn of events, BMW has surpassed Tesla in European electric vehicle sales for the first time. According to JATO Dynamics, BMW saw a 35% increase in EV registrations in July 2024, while Tesla experienced a 16% decline. This shift occurs as overall car demand in Europe rose by 2%, with 1.03 million units registered in July. Despite a dip in the EV market share from 14.6% to 13.5%, BMW's success is attributed to strong sales of models like the iX1, i4, and i5. Meanwhile, the Tesla Model Y, once Europe's top-selling vehicle, fell to 9th place. The Dacia Sandero took the lead with 22,400 units sold. The SUV segment remains dominant, making up 54% of all vehicle registrations, with Volkswagen Group leading in volume. The rise of affordable models is easing the transition from traditional vehicles to SUVs, despite challenges in the EV market. Elon Musk is facing financial hurdles with X, formerly known as Twitter, as the platform's revenue has dropped by 84% since his acquisition. In Q2 2024, X generated only $140 million in US revenue, a stark contrast to $661 million in 2022. Advertisers have pulled back due to Musk's controversial actions and statements, and lawsuits against advertisers could further deter business. Tesla investors are concerned Musk might need to sell more Tesla stock to cover X's financial shortfall, potentially impacting Tesla's stock value. Analysts estimate Musk may need to liquidate $1 billion to $2 billion in Tesla shares, possibly causing a 5 to 10% decline in stock price. This situation mirrors past instances where Musk's stock sales affected Tesla's market value, creating tension among shareholders. Tesla's reputation in Australia is waning, with sales dropping significantly as potential buyers shy away due to CEO Elon Musk's controversial public persona. A YouGov survey reveals Tesla's brand health has turned negative over the past 15 months, coinciding with Musk's acquisition of Twitter and his vocal political views. This shift has alienated environmentally conscious consumers, leading to a 12.9% decrease in Tesla sales in Australia this year, while the overall EV market grew by 15%. Tesla's share of total EV sales has fallen below 50%, reflecting intensified competition with new EV models entering the market. In the US, similar trends are observed, particularly among Democratic voters, resulting in a 6.3% drop in sales last quarter. Despite these challenges, Tesla's board supports Musk, approving a $45 billion executive pay package. Analysts suggest Tesla's sales decline is due to increased competition and changing demographics in the EV market. Acura has introduced significant price cuts for its 2024 ZDX electric SUV, positioning it as a competitive option against Tesla's Model Y. The ZDX, Acura's first all-electric vehicle, now offers nearly a $30,000 discount, making it cheaper to lease than the Model Y. The base model starts at $64,500 with a range of up to 313 miles, while the Type S variant is priced at $74,500 with 499 horsepower and a 0 to 60 miles per hour time of 4.3 seconds. Acura's incentives include a $4,000 Conquest cash offer for customers with 2014 or newer vehicle from select brands, reducing monthly lease payments. The ZDX is listed at $309 per month for 27 months in California, with an effective rate of $504 per month after discounts. In comparison, the Tesla Model Y long range starts at $44,990, but has a higher effective lease rate of $605 per month. The ZDX features a modern design with 22 inches of digital screen space and Google built-in for navigation, aiming to accelerate Acura's transition to an all-electric lineup. Tesla is hiring data collection operators to train its humanoid robot, Optimus, offering pay rates up to $48 per hour. The job involves wearing motion capture suits and VR headsets to perform tasks for data collection, crucial for training the robot to handle generalized tasks. This follows Elon Musk's 2021 announcement of Optimus, intended for roles from factory work to caregiving. The role requires walking test routes and performing tasks for over 7 hours a day, with additional responsibilities like data analysis and report writing. Tesla seeks applicants between 5'7" and 5'11", likely to match the robot's dimensions. Experts suggest Tesla aims to gather extensive data, similar to its autopilot approach, to train the robot effectively. The company has hired over 50 workers for this role in the past year, indicating a significant push towards data collection. The job requires endurance for wearing motion capture gear and coping with potential VR-related disorientation. Elon Musk's acquisition of Twitter, now X, is being labeled as potentially the worst leveraged buyout for banks since the 2008 financial crisis, raising concerns for Tesla shareholders. Musk financed the $44 billion deal with over $13 billion from a consortium of lenders, which has become a burden for the banks involved. The deal coincided with rising borrowing costs and Twitter's struggling financials, leading to a lack of interest from investors in purchasing the debt. Nearly 2 years later, banks have been unable to offload this debt, tying up capital and limiting new deals. Twitter is expected to incur over $1 billion in annual interest, while its US revenue is projected at $600 million this year. Musk's attempts to negotiate more favorable terms with lenders have stalled. The debt situation has impacted Barclays, leading to compensation cuts for its senior M&A team and prompting many managing directors to leave. Concerns are growing that Musk may need to sell $1 billion to $2 billion worth of Tesla shares to address financial issues at Twitter, raising alarms among Tesla investors. That's all for today's episode of the Tesla Daily News. Thank you for tuning in and staying informed on the latest developments in the world of Tesla and the automotive industry. Don't forget to check the episode notes for links to all the stories covered today. Join us next time for more insights and updates. Until then, drive safe and stay curious.